So, you want to get into real estate, but the price tags seem out of reach. You see people flipping houses and buying apartments, and it feels like a game for the super rich. But here's the truth. You don't need a fortune to start investing in real estate. The barrier to entry is much lower than you think. Today I'll show you 5 actionable strategies to start building your real estate portfolio, even if you're a complete beginner on a tight budget. These aren't get-rich-quick schemes. They're real, proven methods people are using right now to build wealth. By the end of this video, you'll have a clear roadmap to get started. From investing a few dollars on your phone to owning property with little money down, let's break down the myths and show you how real estate investing is more accessible than you ever imagined. Want to dip your toes into the world of real estate investing without the hassle of being a landlord? The easiest way to start investing in real estate? REITs, Real Estate Investment Trusts. These are companies that own or finance income-producing real estate across a range of property sectors. Think of a REIT like a mutual fund, but specifically for real estate. Instead of investing in a variety of stocks, you're investing in a portfolio of real estate assets. You buy shares, and instantly own a piece of a huge portfolio. Apartments, malls, offices, even data centers. It's a diverse collection of properties all working to generate income for you. REITs pay out most of their income as dividends, so you get passive income without being a landlord. No dealing with tenants, repairs, or late-night phone calls. You can buy REITs through any brokerage. They're publicly traded on major stock exchanges, just like regular stocks. Fidelity, Vanguard, Robinhood, you name it. Sometimes you can start with as little as $10. This makes them incredibly accessible for new investors with limited capital. REITs offer instant diversification across various property types and geographic locations, reducing your overall risk, and are highly liquid. Unlike owning physical real estate, you can easily buy and sell REIT shares on the open market. Need your money? Just sell your shares. There are different types. Equity REITs own properties, generating income from rents and property appreciation. Mortgage REITs finance them, earning income from the interest on mortgages and other real estate debt, and hybrid REITs do both. For beginners, broad REIT ETFs like VNQ are a great start. These ETFs provide instant diversification across a wide range of REITs. The downside, REIT prices can be volatile, influenced by interest rates, economic conditions, and overall market sentiment. And you don't control the properties. You're relying on the REIT's management team to make sound investment decisions. Dividends are taxed as ordinary income, which can be higher than the tax rate on qualified dividends or long-term capital gains, so consider holding them in a Roth IRA. This can help you avoid paying taxes on the dividends in retirement. Still, for anyone with limited funds, REITs are a fantastic low-barrier way to get exposure to real estate. Set up automatic investments, let it grow, and you're in the game. No massive down payment required. It's real estate investing, simplified. Start small, learn as you go, and watch your portfolio build over time. REITs are the perfect first step for new investors. They offer a blend of income, diversification, and liquidity that's hard to beat. Let's move on to a more hands-on approach. House hacking is the ultimate strategy, a game changer in the world of real estate investment. It's a method that allows you to get your foot in the door, even when capital is tight. For owning property with little money down, it's about leveraging the power of real estate to build wealth without breaking the bank. Here's how it works. Buy a duplex, a property with 2 separate living units. This is the foundation of the house hacking strategy. Triplex or fourplex, expanding your options and potential rental income streams. The more units, the greater the potential for offsetting your living expenses. Live in one unit and rent out the others. This is the core principle of house hacking. Turning your primary residence into an income-generating asset. The rent covers most or all of your mortgage. Ideally, it should also cover property taxes, insurance, and even some maintenance costs. Suddenly your biggest expense, housing, disappears. Imagine the freedom of not having to worry about a monthly mortgage payment. You're living for free, building equity in your property with each mortgage payment, and learning the landlord business. You'll gain invaluable experience in property management, tenant relations, and real estate investing. Because you live there, you qualify for owner-occupant loans like FHA, which offer more favorable terms than investment property loans, which means as little as 3.5% down. This significantly reduces the upfront capital required to purchase a property. On a $400,000 fourplex, that's just $14,000. a relatively small investment to kickstart your real estate journey. Veterans can use VA loans for zero down, making house hacking even more accessible. Yes, you'll pay PMI with low down payments, private mortgage insurance protects the lender, but rental income should cover it. Factor it into your calculations to ensure profitability. After a year, you can move out and rent your original unit as well. Rent your old unit and repeat the process. Find another multi-unit property to live in and rent out, building a portfolio with minimal cash. This is how you can rapidly scale your real estate holdings. It's not passive. You'll handle repairs at least initially to save money and learn the ropes. Screen tenants and sometimes lose privacy. Living in close proximity to your tenants requires setting boundaries. But the financial upside is huge. The potential for wealth creation far outweighs the challenges. You can also house hack a single-family home if multi-unit properties aren't available or appealing. By renting out bedrooms, great near colleges or in cities. This can significantly offset your mortgage payment. House hacking is a short-term sacrifice requiring some adjustments to your lifestyle. For a massive long-term gain, it's an investment in your future financial security. You get free housing, build wealth through equity and cash flow, and gain experience all at once. It's a comprehensive education in real estate investing. If you're serious about real estate and committed to building a successful portfolio, this is one of the most powerful ways to start. It provides a solid foundation for future investments. It's how many investors build their first portfolio and achieve financial independence. Ready for a more passive option? Let's talk crowdfunding, a hands-off approach to real estate investing. House hacking isn't glamorous, it involves hard work and dedication. But it's a proven path to financial freedom, a tangible strategy for achieving your financial goals. Make the sacrifice now, and your future self will thank you. You'll be reaping the rewards of your hard work for years to come. Real estate crowdfunding lets you invest in big projects, like apartment complexes or commercial buildings, without being a landlord. Platforms like Fundrise and Realty Mogul pool money from thousands of investors to fund real estate deals. You can browse projects, see the business plan, and invest as little as $10 or $500 depending on the platform. There are two main options: equity investments, own a share of the property, higher risk and reward, or debt investments, lend money, get paid interest, lower risk. The sponsor manages everything: renovations, tenants, the works. You just collect your share of the profits. The catch? Your money is locked up for years. No easy way to cash out early. And you're trusting the sponsor's expertise, so do your homework before investing. Crowdfunding opens doors that used to be closed to everyday investors. It's a great middle ground. More direct than REITs, less work than being a landlord. Just remember, it's passive but not liquid. Research the platform and the sponsor before you invest. If you want to be more hands-on, let's talk about wholesaling. Crowdfunding is democratizing real estate, just be sure you understand the risks. Wholesaling is a strategy that's tailor-made for the hustlers, the go-getters, and those who aren't afraid to put in the work. It's about finding opportunity where others see problems. It's a business where no big money is needed up front. It just requires grit, determination, and a whole lot of hustle. It's about leveraging your resourcefulness to create value. So, here's the play, the basic strategy that can lead to financial freedom. First, you find distressed properties and motivated sellers. Look for situations where homeowners need to sell quickly, often below market value. Next, you get the property under contract at a discount. This is where your negotiation skills come into play. Secure the rights to purchase the property at a price that leaves room for profit. Then you sell that contract to an investor for a fee. You're essentially assigning your rights to purchase the property to someone else who will complete the transaction. Remember, you're not actually buying the house yourself, you're selling the right to buy it. You're acting as a middleman, connecting distressed properties with eager investors. Let's look at an example to illustrate how this works in practice. You contract a house for $150,000, meaning you've secured the right to buy it at that price. Then, you sell the contract for $160,000, finding an investor willing to pay that amount for the opportunity to purchase the property. You pocket $10,000 as your assignment fee. All this happens without ever owning the property or taking out a loan. Your main job is marketing and lead generation. You need to consistently find deals and uncover opportunities. You also need to build a list of cash buyers, investors who are ready and willing to purchase the contracts you secure. The upfront costs are relatively low, primarily focused on marketing expenses, and perhaps a small earnest money deposit to show the seller you're serious. There's no need for good credit or traditional bank loans. So what's the challenge? What makes this difficult? It's a grind, requiring consistent effort and dedication. You'll face rejection from sellers, you'll need to negotiate hard to get the best possible deals, and you'll need persistence to keep going even when things get tough. It's a sales job first and foremost, with real estate knowledge playing a secondary role. It's crucial to know your state's laws regarding real estate transactions. Some states have strict rules and regulations about wholesaling that you need to be aware of. Always use the right contracts and legal documentation. It's wise to consult a real estate attorney to ensure you're operating legally and ethically. Wholesaling offers a fast way to make money in real estate, and it's a great way to learn the ins and outs of the real estate business. However, it's not a passive income strategy, and it's certainly not easy money. But if you're willing to hustle and put in the effort, it can be your entry point into the exciting world of real estate investing. Build your network of buyers and sellers, sharpen your negotiation skills to secure profitable deals, and you can start building your real estate empire with almost no money down. It's definitely not for everyone, but it's a proven path to success for many real estate investors who are willing to put in the work. Ready to scale up your real estate ventures? Then let's talk about the power of partnerships in real estate. Because at the end of the day, wholesaling is all about the hustle, the drive, and the determination to succeed. If you've got that entrepreneurial spirit, you can absolutely make it work and achieve your financial goals in real estate. Partnerships are the secret weapon in real estate. Team up, and you can do deals you'd never manage alone. If you lack money, find someone who has it. If you have time and skills, bring those to the table. The most common setup: one partner finds and manages the deal, the other brings the cash, split the profits. Always get everything in writing: roles, responsibilities, profit splits, and what happens if things go wrong. Partnerships can be for a single flip or a long-term rental portfolio. Pooling resources lets you buy bigger, better properties. You'll share profits and decision-making, but you'll also share risk and workload. Choose partners carefully. Trust, communication, and complementary skills are key. Vet your partners like you would for a business marriage. Partnerships lower the barrier to entry and let you leverage other people's money, skills, and networks. For beginners missing one key ingredient: money, time, or knowledge, partnerships can be the launchpad. Just remember, clear agreements and the right partner make all the difference. Leverage teamwork to accelerate your real estate journey. Now, let's wrap up with your first step. There you have it, 5 powerful ways to start investing in real estate, no matter your budget. From REITs to house hacking, crowdfunding, wholesaling, and partnerships, there's a path for everyone. The myth that you need to be rich is just that, a myth. Your first step isn't buying a property. It's learning, planning, and choosing the right strategy for you. Start small, keep learning, and take action. Real estate investing is a marathon, not a sprint, but you can start today. Thanks for watching. Like, subscribe, and take your first step toward building wealth. Disclaimer: we are not financial advisors. This video is for informational purposes only. Please consult a qualified professional before making any financial decisions.